What is up, YouTube? My name is Daniel and you are tuning into my channel, Life with Dan. Thanks to each and every single one of you who's watching my video today. I've got another stock market video for you guys. What I'd like to do for the next 15 minutes or so is go into as much information as possible on the super secretive, highly anticipated company, Palantir Technologies. This data analytics software company has been causing a lot of commotion on stock market headlines recently as it gets ready to IPO on the New York Stock Exchange next week on September 23rd. With all the talk about IPOs lately, especially after Snowflake's IPO today, where it opened up some 100+% right out the gate when it started trading, and just, with the fact that September is going to be a big month for IPOs, has a lot of investors, I'm sure, wondering about Palantir, its upcoming IPO, and whether or not they should be saving up them dollars to get ready to buy on September 23rd. So what even is Palantir? What the heck is an IPO? And should we be paying attention to Palantir's IPO and getting ready to buy the stock next week? We're going to go into all that information and some right after the intro. So before we get into Palantir, it's important that you guys know what an IPO is. We'll go back to the topic of IPOs and how we should think about approaching them, but just so that you can follow along with what I'm talking about with Palantir, IPO stands for Initial Public Offering. So if we look at what that means by Investopedia's definition, an initial public offering refers to the process of offering shares of a private corporation to the public in a new stock issuance. Pretty straightforward what an IPO is, but to use Palantir as an example, September 23rd is their IPO, which means it is their first time, their initial, public, so not private anymore, offering of what? Their stock. So it's the first time that a company offers its stock to the public. Prior to going public, a company is traded privately, inside traders, the original founders, things like that. So with that said, Palantir is still a private company. They have yet to IPO, but that day is coming next week, September 23rd, which means people like you and I can now buy into that company as of that date. So now let's go back to Palantir, the company. So what is Palantir, guys? Well, what it is an eyeball-looking artifact out of the Lord of the Rings. No, but what they actually are is an American data analytics company. What they do is develop and install proprietary software that they've made that helps companies and government agencies basically handle and make the best use of huge amounts of data. The way Palantir puts it, their software is made for making data-driven decisions and operations. It's for helping institutions take all of their data, all those thousands upon thousands of files and bits of information that they have in their database, taking all of that information, integrating it, and seamlessly putting it all into one searchable platform.
Absolutely the foundation of everything else that Palantir does. And by data integration, we simply mean that Palantir takes all the forms of data that exist across your enterprise, everything from the documents and spreadsheets that live on your analysts' desktops, all the way up to your large enterprise-grade databases, and makes all of those accessible from within a single, unified environment.
As I've been researching the company over the past couple of weeks, I've been trying to kind of, understand more and more what this stuff means, what their products really do. And in a very animated way that I've come up with thinking of their products, I kind of picture the early stages of the technology that Jarvis would be on the Avengers. If you guys think about like that kind of all-knowing, kind of has access to all of your stuff, software, that's kind of what I think of when I think of Palantir, what an early Jarvis would look like. So just a funny thing that I thought I'd put out there, not at all anything having to do with what the company actually does, but it kind of helps me see it that way, taking all the scrambled information and kind of surrounding you with it in a way that helps you make everything more useful, makes it more efficient for you to get access to your data. So the company was actually founded in 2003 by Peter Thiel, Nathan Gettings, Joe Longsdale, Stephen Cohen, and Alex Karp, but only 3 of those founders remain with the company today, as you can see here from their S1. The 2 head honchos that kind of come up most of the time when people think about or talk about Palantir are 2 of the co-founders, Peter Thiel, most notably known for being a co-founder of PayPal, now a multi-billion-dollar investor, entrepreneur, and Alex Karp, also billionaire and the CEO of the company. Alex Karp in particular is just known for being a very odd, very interesting CEO, wears very bright color athletic attire, does martial arts, and recently caused a lot of commotion with a letter that he put out basically shunning Silicon Valley Valley for their morals and their culture, and recently making the announcement that he will be taking Palantir out of Palo Alto and moving over to Denver, Colorado. Palantir actually got its start on the intelligence side of things, working in the field of intelligence, helping different government agencies in the United States, assisting in counterterrorism investigations and operations before they actually ended up working with, actual commercial businesses and whatnot. As complex a company as Palantir may seem, they actually credit most of what they are to two main softwares. They have Palantir Gotham and Palantir Foundry. As we can see here, Gotham was their first software that they made, and it was constructed for analysts at defense and intelligence agencies. I'm going to read this paragraph straight from their S1. Gotham enables users to identify patterns hidden deep within datasets, ranging from signals intelligence sources to reports from confidential informants, and helps U.S. and allied military personnel find what they are looking for. We later found that the challenges faced by commercial institutions when it came to working with data were fundamentally similar. Companies routinely struggle to manage, let alone make sense of the data involved in large projects. Foundry was built for them. The platform transforms the way in which organizations interact with information by creating a central operating system for their data. So there again is that language of kind of making a central home, a central operating system for all the data within an organization or agency. So, kind of that early technology Jarvis vibe going on again. But that's essentially what the company does. It has its two main softwares, but obviously within those two softwares, there are several dozens of apps that companies and agencies use. As technology proceeds and as we get more and more dependent on data, I think something like Palantir is going to be more and more necessary for companies to take on. As more and more data gets used and there's more to sort through and more to organize and more to analyze, it's going to become harder and harder for companies to do that. And they need software that helps them do so. So if Palantir makes it that much easier, if it takes that extra step of organizing everything, detecting connections between things and being able to tell you something that you might have never seen, I think definitely Palantir sounds like something that could be here to stay for years and years to come.
Because we've designed a technique and a framework and software for doing this that is fast, by which I mean that we can come in and have it up and running in days or weeks. It's not a months-long development project. A way that is flexible, meaning that it can deal with all sorts of different data, like I said, from your traditional databases all the way up to far-out stuff, GPS devices, map imagery, video. And a way that is massively scalable. So we're talking about the ability to go up to billions of records, a petabyte of data at some of our larger deployments.
But on that note, the technology itself is very much criticized by a lot of skeptics, by a lot of people that worry about what the technology could potentially be used for. It is a worrisome technology in the sense of surveillance. Palantir does have contracts with ICE that it can't fully disclose all the information on. Contracts with different government agencies that help them track people, find specific people. One of the biggest things that gave Palantir its fame and hype is the fact that it might be tied to having found Osama bin Laden. So, there is a lot of skepticism and a lot to think about when it comes to this type of technology. But the CEO himself, Alex Karp, knows that and has made a point to, bring that up and to talk about that. The company actually prides itself on allegedly not being one of these Silicon Valley companies that, makes such a big use of mining and selling data. As we can see here, I'm reading straight from their S1. Alex Karp made it a point to say on their opening letter, our company was founded in Silicon Valley, but we seem to share fewer and fewer of the technology sector's values and commitments. From the start, we have repeatedly turned down opportunities to sell, collect, or mine data. Other technology companies, including some of the largest in the world, have built their entire businesses on doing just that. Software projects with our nation's defense and intelligence agencies whose missions are to keep us safe have become controversial, while companies built on advertising dollars are commonplace. For many consumer internet companies, our thoughts and inclinations, behaviors, and browsing habits are the product for sale. The slogans and marketing of many of the Valley's largest technology firms attempt to obscure this simple fact. So clearly Karp is pretty upset about how upset we are, the common people, about, the technology that Palantir has, when we seem to not care when the Facebooks, the Googles of the world are selling our data, are mining our data, and basically manipulating our thoughts. So, definitely a lot of drama with Palantir, a lot of interesting things to look into. But yeah, that's basically what they're all about. They're a data software company, and according to them, they are not one that is in it to do any harm to the people. So with all that said, guys, now that we've taken a look at what Palantir is and a little bit at what they do as a company and what they offer, we'll take a look at some of the news revolving around their upcoming IPO, and thanks to their recent S1 filing, we'll be able to take a look under the hood at some of their key financial highlights to ultimately come to the decision if Palantir Technologies as an investor is a good company to put your money into, specifically next week on the day that it IPOs. According to some articles that are out there, Palantir had actually started the IPO process confidentially sometime in July. But as you guys can see here, it looks like we do have the final version of the SEC filed S1 registration form as of August 25th of this year. Now, assuming there's no more updates to their prospectus, which there shouldn't be, and assuming we have a fully accounted for diluted share count, we should be looking at a potential valuation right out the gate for Palantir of $20+ billion. And now to get into the financial information we've all been waiting to get into, as we look here at their S1 to cover revenue from recent years, Palantir generated $742.6 million in 2019. That reflects a 25% increase from their 2018 revenue, which was $595.4 million. Now, the first half of this year, so January through June 2020, they generated $481.2 million in revenue, which for the same period last year, so for the same half year 2018, is a growth rate of 49%. So it seems like they've been improving their operations by driving increases in revenue, and it seems like they've been maintaining their expenses relatively the same. As we continue on here, it says our operating results have improved significantly in recent years. In 2019, we incurred a net loss. So for the end of the year, after considering expenses after revenues, they incurred a net loss of $579.6 million, or a net loss of $337.7 million when you exclude stock-based compensation. But if you ask me personally, we should never exclude stock-based compensation from any type of financial analysis. It is an actual expense, so you should never disregard it. Always, in my opinion, look at the number that does include every and all expenses that a company has. So that being said, a net loss of $579.6 million, and an H1, which means half one, so the first half. In the first half of 2020, our net loss decreased to $164.7 million, down from a loss of $280.5 million in the first half of 2019, including stock-based compensation. According to the company, the improvements in their operating has resulted from driving an increase in revenue and a significant decrease in the time and number of software engineers required to install and deploy our software platform. So it looks like they're getting more efficient with installing their platform, their software. Getting it integrated into a customer system is becoming a lot quicker for them, a lot smoother, therefore reducing their costs. Very good sign. With $481.2 million in revenue for the first half, Palantir is anticipating to do just about $1 billion in revenue for full year 2020. As you guys can see here, part of their S1 goes into revenue over time. So this chart actually does a good job of showing us the progression of their revenue growth over the past decade plus. The growth is starting to accelerate at a much more rapid pace. So, it is exciting to see because it does seem like revenue for the next few years down the road could be set to continue growing. So at first glance, it might look like there are a lot of good things going for Palantir prior to their IPO. And there are. They've been constantly growing their revenues year over year at least a 25% plus growth rate, which is excellent growth. And at the same time, it seems like they've been getting a good hold on their expenses lately, keeping them at or around the same or even lowering them in certain quarters. They're growing their customer base and constantly upgrading their software, making it more and more difficult for the customers that they do get to leave their software. So what's the problem, right? Might as well get into Palantir. It looks like a good company. Things are going for them. They're growing. Why not get into the IPO? But this is where investors, especially early investors, make a lot of mistakes, guys. IPO days for a stock are famously known for being some of the most volatile, some of the most crazy days in a stock's history. So much so that, in my opinion, most of the time, IPO days are in no way indicative, representative of how a company actually does, how a company's fundamentals actually are behind it. What it ends up being is a lot of hype and emotion and excitement at the end of the day. IPO day is just something that excites investors. It's the first opportunity you get to jump into a company. So, it has a lot of emotion behind it. It gets people excited. But at the end of the day, that is not what the fundamentals of investing say, and that is not how someone should approach buying into a company. One thing that investors need to understand, crucially, is that when you get into a stock is just as, if not more important, as what stock you get into. One really important thing I wanted to point out with regards to Palantir's IPO is the fact that there are a lot of shares that are going to be on lockup once that IPO comes to market, as you can see here from this article from CNBC. As we can see here, Palantir actually plans to do a lockup after its direct listing. Says here, Palantir, which in July confidentially filed to go public, is also reportedly planning a partial lockup for its direct listing, according to the New York Times. That means people who invest in Palantir would have to hold on to the stock for a certain amount of time before selling it. The report says investors would have to hold at least 80% of their shares in Palantir until after December 31st. The article goes on to say that some investors actually think the price could be inflated when Palantir goes public because there will be very few shares available due to the lockup. It says Palantir said in its prospectus that 1.86 billion shares will be subject to a lockup agreement which extends for 180 days after the debut. You guys, Palantir is reporting a full diluted count of 2.17 billion shares. So for 1.8 of those to be on lockup at IPO, I mean, that is a lot of potential risk down the road once that lockup expires. Potentially what could happen, guys, down the road, these private investors that had a bunch of shares that were forced to hold on to 80% of them could be waiting for the opportunity to sell. And then comes December 31st, where they're now able to sell their shares, and you could see huge downward turns in the stock. I mean, these are people that have millions of dollars worth of shares in Palantir. These are big companies, private investors that we're talking about here. So it's big dollar amounts that could potentially move the market down, or move the stock, down the road. So imagine being a private investor, having been invested in the stock since it was before even $1 billion valuation, and now we're in the $20+ billion valuation range. The stock IPOs, us newbies go crazy for it, send the stock valuation even higher, and now you're a private investor able to pull out and cash out your gains come December, of course. We could see some selling potentially from the get-go because, like we said, only 80% of these private investor shares are on lockdown, so they could still sell 20% of their shares. Those are the shares that, us newbies are going to be messing around with once the IPO starts. But that's one of the big risks that you take when you invest in an IPO, guys. You're basically, just kind of taking whatever valuation gets thrown at you and not taking into consideration all the things that could trickle in for the stock down the road based on, what's going on with the company. We saw a perfect example of this just this week with the Snowflake IPO, guys. Like we saw earlier, Snowflake opened up some 100+% right out the bat, but that doesn't mean that, anyone that bought that stock bought it and was up in a few minutes 100-some%. The stock was originally IPO priced at $120. It was valued at $120 per share, but we basically shot the valuation up. We doubled its price from $120 to $240-some a share that it IPO'd at. And the very next day, guys, we see the big correction in the stock already, down 10+%. So that just comes to show you kind of, I guess, the lie, the tease that is an IPO. There is a lot of hype around it. There is a lot of excitement, but ultimately that big move that often happens with IPOs, it's hype and it's not wise decision making. So as days go on, you usually see some type of correction start to happen after the fact, which is what we're seeing with Snowflake. Another very important thing that you need to take into consideration with regards to risk with getting into the IPO, guys, is the fact that this company is still not profitable. In the 17 years that it has been in business, it has yet to see a year where it was net positive at the end of the year. As we can see here on their S1, there is an entire section titled Risk Factors, which is not uncommon to see in an S1. A company lays out several risks associated with getting into the stock, and they go into all the potential things that could, hurt the stock down the road so that you as an investor don't get any surprises. As we can see here, the very first one that they laid out at the very top, it says, "We have incurred losses each year since our inception. We expect our operating expenses to increase and we may not become profitable in the future." I'm going to go ahead and read that paragraph for you guys because it's very important. "We have incurred losses each year since our inception, including net losses of $580 million and $579.6 million for the years ended 2018 and 2019 respectively. Net losses of $280.5 million and $164.7 million for the 6 months ended June 30, 2019 and June 30, 2020. We may never achieve or maintain profitability. In addition, our operating expenses have increased over time as we continue to expand our business, industry verticals, and the breadth of our operations, upgrade our infrastructure, hire additional employees, yada, 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 yada. We expect that our costs of revenue and operating expenses will continue to increase." So as you guys saw, they have yet to see a positive year, and they don't even know if they ever will. I mean, this reminds me of Uber's IPO when they said something similar, that they might not ever become a profitable company. It's just a lot to think about with regards to buying into an IPO that's getting valued at $20+ billion when the company isn't even profitable to begin with. Besides the fact that they're going to have a lot of shares on Lockup and that they have yet to see a profitable year / might not ever see a profitable year, the risk factor section of Palantir's S1 filing has a lot of information that I think is very worth checking out, especially if you're going to buy the dang stock. Like I said, guys, Palantir is definitely a very interesting company, and I'm very intrigued by what they've got going on with their software and what they're doing in data analytics. I think the products that they offer are definitely useful and can definitely scale down the road, and I think there's a very positive outlook for Palantir's future. But that being said, I don't think it's the right move to invest in Palantir's IPO next week. Palantir stock isn't going anywhere, and if there's anything I learned after having invested in Pinterest IPO, as I mentioned in my other video a couple weeks back, is that I had time to invest. I had time to do more homework, and stocks go up and down. There would be other opportunities. So, if you choose to pass on the IPO, that doesn't mean that you're not going to get opportunities down the road. You can buy into the stock literally any day. And if it does IPO and it makes a huge move upwards as people get emotional and jump into it, don't feel like you missed out, because if you weren't planning on making a quick flip of the stock, if you weren't planning on holding it for a few hours, few days, a week, tops, whatever, right, as someone who flips a stock would, then that quick move up wouldn't even matter to you because you're focused on getting a good average cost, on buying the stock over time, and waiting for what's going to happen a few years down the road. So to wrap things up, guys, Palantir is definitely a company that I'm hoping to get invested in later on when I find a better price. Hopefully something less than $20+ billion worth of valuation as a company that currently doesn't make a profit. But that just about wraps it up for this video, guys. It was a complex one to get into because it's a complicated company to try to explain, but I hope that this video was beneficial to you guys. If you guys took any value out of this video, I just ask that you guys do me the favors of hitting the like and subscribe buttons so that I can continue growing my channel, I can continue feeling good about myself, and keep putting videos out for you guys. But that's it, guys. Thanks again to all of you. I'll see you guys next week with another video. This has been Life with Dan.